Okay, I think we are live now. Hello, everybody. Um Such an exciting time. So good to see a great number of audience for a session, for a virtual session today. A big welcome to everybody from Sahamati. The While it is so good to see such a big audience for this session, it's also not surprising because this particular session demands this kind of attention. On 23rd of November, RBI notified that GST would be a part of the account aggregator ecosystem as an FIP. And I believe it was around evening when this happened. And from that moment on, the entire team of Sahamati, all of us, have been inundated with queries around how it's going to happen, what is going to happen, what will be the data types, when will it happen, so on and so forth. And it was therefore but natural for us to come together and have a deep dive session where we can try to address as many questions as we have come across about this new announcement, and give you as much information as possible. So that is where we are today, and we also thought that it would be a great idea to open this particular session with somebody who can give us a good perspective of where an initiative like this will lead for the MSME industry, and who better than Shri Subramanian Raman. Mr. Raman is the chairman and managing director of Small Industries Development Bank of India. SIDBI, as you know, has been in the forefront of the account aggregator initiative right from the beginning. It's been a pleasure to see the kind of participation from SIDBI for this initiative, and also a lot of knowledge that they share with us, as we progress along in this ecosystem. So, sir, without taking any more time, I will hide myself from the stage and hand it over to you to impart some viewpoint on what do you think where we are going to head. Thank you.
Great. Very good afternoon to all of you. I am speaking to a highly educated and informed set of people. So I have no intention on getting into basic issues of either GST or account aggregator, or for that matter, similar initiatives that are there in the digital space. But as we all know, it's truly the testimony of our architects, and we therefore should applaud each one of the architects which have led India to a position where digital data from the source is now available actually at the press of a button for those persons who have a need of that data. So many concepts get woven into this particular initiative called account aggregator. So there is obviously an owner of data, there are several storage points of that data, and then there is this larger issue of privacy and protection of the owner's data. It's truly remarkable that a concept of account aggregator that is entirely digital, and therefore we do not need pieces of paper, we do not really even need the kind of physical meetings that otherwise would have been needed for a data owner to be able to share their data. The easiest and the probably the most visible sort of relief or benefit that we are getting through this account aggregator system is that we don't need to travel to a bank to get a authenticated statement of our bank account. So all of you, especially those nearer to my age, would recall the number of times we would have to visit a bank in order to get a stamped authenticated copy of our bank statement, which would then be, of course, used for many purposes, some small, not, and some sort of extremely important purposes also, of even sending it to an embassy for a visa, or variety of other purposes that such documents serve us. So, having said that, we know that our assets, so our assets are really financial assets. Our assets could also be non financial assets, in the sense we have assets personal to us. So, that could be our driving license, it could be our, caste certificate, it could be a variety of things that we own that are personal to us. And in the overall data architecture that has now come about between the DigiLocker, the account aggregator, and a slew of digital tools that are available, at least within the banking system, we have the comfort of sitting where we are and completing our work. And this has now further extended to the fact that we can complete our documentation from the comfort of our homes, where digital stamping and digital signing on documents and contracts is also entirely remote and therefore non physical. Account aggregator is a consent manager, and that's really how data protection bills, which have come about in the past, including the most recent one, they really talk about the role of a consent manager. And a consent manager therefore has a account based relationship with their account holders. So the minute we get in touch with an account aggregator, there is, from an RBI perspective or from a PML perspective, that minimum amount of KYC that needs to be done. And therefore, even today in the RBI master directions, there is that little bit of, I would say, desired clarity that we can complete the KYC of an entity when they become a customer of an account aggregator by simply taking an existing KYC and completing this fresh KYC. So the RBI has equated the customer relationship with account aggregator as one with fiduciary responsibilities, which is correct. And therefore, having fiduciary responsibilities, there is a need for an account based customer identification. The account aggregators, as they currently have done, are doing an OTP based identification of the customers. Now, this is still, I think, an open area, and therefore it would be good for all of us collectively to sort this out with the RBI, that the existing practice of KYC is sufficient for the purpose of account aggregator. The account aggregator, as has been designed, is much more than just the financial sector. So we are all right now probably speaking from the lens of the financial sector, but that need not be the case. We could easily be talking about health records, we could be talking about education records, and therefore the account aggregator has the power of making it much easier. It's really, in a sense, ease of living for all of us, where we do not worry about going to different data storage points and seeking our own data. So, as all of you might know, the Ministry of Education had some years ago, about 5 or 6 years ago, created depositories for educational certificates. Now, with the advent of the account aggregator as a consent manager in the way we see it, there is no need for yet one more depository to hold those certificates. One, they are on the on the DigiLocker, and two, we could look at the account aggregator picking up these educational certificates from the university itself, which is where which is actually the source or the origin of the certificate. So the sheer authenticity of data is established by the fact that this electronic courier or account aggregator has the ability to traverse to the source, pick up the data, bring it in an encrypted manner, and give it to the desired destination, which is determined by the owner of the data. So, this is really very important for all of us to understand the true magnitude of this concept of account aggregator. Of course, right now it is within the financial sector, and therefore, between the regulators of RBI, SEBI, and IRDA, and of course, the pension regulator, this is where most of our financial data currently resides. And therefore, all these regulators are now on board. And therefore, we could look at a smoother journey for the account aggregator in the financial sector. And let me now come directly to what we have been working on, as I would call the most obvious and the nearest ally to the account aggregator, which is the GST Sahay. So, GST Sahay is entirely dependent on the account aggregator, and ever since the notification of GSTN becoming an FIP within the AA framework, that brought about a completeness in GST Sahay's dependence on the account aggregator. So, if some of you have received a participation agreement from SIDBI, then you know that it starts off by acknowledging the fact that the person who is signing the participation agreement is already on the account aggregator framework. So there is a participation agreement of the account aggregator framework, and therefore GST Sahay is unabashedly relying upon that and then carrying the story forward. Both the GSTN and the bank accounts are sought to be received using the account aggregator framework. So the first part of GST Sahay is nothing but a use case of the account aggregator. The second part is, once that data is pulled, then it comes into the respective BRE or the rule engines of respective banks. And then it's for the bank to take a call as to how they would like to make an offer to a business entity that wishes for financing of the invoice. So GST Sahay is nothing but implementation of what has been talked about for a few years, led by Mr. Nandan Nilekani, and is also known with what is known as the OCEN or the OCEN framework. So it is really about democratization of credit. It's about unsecured credit getting some primacy. So the way I look at GST Sahay is, it's India's biggest and best delivery platform for unsecured credit to whoever may seek it. A lot of you are aware that working capital is provided by banks. It goes through a particular formulation. There is a drawing power that is arrived at, and the entities have to work within the drawing power. What GST Sahay and OCEN really do is, they move the business entity away from the traditional straitjacket of working capital assessment, and they allow for an instantaneous assessment by a lender whether they would like to make an offer for financing an invoice. So, even though we might talk about invoice magnitudes as small as a few hundred rupees, but in our daily sort of engagement with the customers, we find that many customers are happy to get their bills discounted or their invoices financed, and they would honestly like to have this as a separate facility. Not all business customers in the country have the privilege of getting a working capital assessment done by a bank, and therefore, not many are in possession of what is known as a CC or a credit limit from a bank. So, the cash credit is something that's been in the banking system in India for a very long time, but amazingly, the cash credit system does not exist in other large economies in the world. So, what we are really talking about is pushing forward unsecured lending based on the cash flow history of a business entity. And therefore, let me come directly to the next point, that the dedupe registry for invoice financing is completely ready. The participation agreement that has been sent to everybody calls for all the lenders to create their apps. There is a reference app which SIDBI has created. This reference app is really for the benefit of all the potential lenders who would like to come onto the GST Sahay platform. The aim is to help them create their own app and get their customers to come to the GST platform and complete the process of financing an invoice. And the duty or the obligation upon all lenders is to mark that invoice as financed. So there is a registry or an invoice registry that has been created, which is a common good for everybody. All the lenders have to therefore report into that invoice registry that a particular invoice has been financed, such that a second finance does not happen. And that is really the simple reason for the existence of an invoice registry, in order to prevent duplication of finance. This invoice registry, in its own time, would get linked to the invoice registry at trades, and therefore we would have a much larger ability and an umbrella of invoiced invoices that are financed. It is really about reducing and mitigating the risk for lenders when they move towards unsecured lending under the GST sort of protection. So the entire protection really comes from the fact that the GST data and the bank data put together allow for a very fine understanding of the business and its health, and how a bank or a lender might take comfort from that data and therefore provide a much finer rate to such a business entity. And therefore, the competitiveness of the marketplace immediately comes in. The marketplace is absolutely necessary for credit to flow more easily into our country. So, just as a point aside from the technology discussion that is probably going to happen today, there is a requirement of something like 25 lakh crores of credit for the MSME sector in the next 3 years plus, is what I would put it at. It is nearly equal to the total credit that MSMEs are today getting from the banking and the NBFC sector. So we are looking at doubling the credit to MSMEs in the next 3 4 years, and therefore the need for platforms such as GST Sahay is not lost upon the policymakers. There are a couple of issues which we are struggling with. One, of course, is the fact that the GSTN coming onto the platform has brought about the need for a buyer consent. This is being, and I personally have taken it up at the highest level, so I probably am not sort of in a position to share any more information with you, but we are all working at respective levels to try and sort that out. Because if today we are getting GST information from our customers without anything called buyer consent, then there is no reason for that situation to change just because we are pulling the data from GST. So the GSPs that we are using is already, you know, aware of this whole flow of data, and which has been accepted over the last few years. So that is certainly one pain point. But the other pain point is that we don't have enough banks which have brought their current accounts onto the FIP framework. So it is very important that all the banks immediately come onto the FIP framework with the current accounts of business entities. And therefore, that will allow for a smoother flow of bank data into the GST Sahay system. So SIDBI has already done, I think, 100 plus transactions. We've not had a very great success rate. It might be something around 25% success. But where the transactions have gone through, we have completed more than one round of financing with those customers. And every bit of the digital journey has worked perfectly, all the way from the onboarding of the customer to, of course, the customer was already onboarded in this case, but all the way up to the ENACH and the payments into the SIDBI account. So it has been proved without doubt. I'm sure many of the other lenders have also performed their initial pilots. But what is very important is that as a group, we have to be putting out the information that belongs to our customer, and therefore it is really for the customer to seek the better rates that are offered in the marketplace. And therefore the marketplace is the most democratic setup that we can possibly conjure and create for these smaller business entities which otherwise really don't have much of a bargaining power with their respective lenders. So it is important that the for the sake of India's growth, for the sake of business moving ahead, we must provide a marketplace that works on democratic lines. Having said that, we certainly are expecting the GST Sahay to move ahead with more lenders coming in. The need for the marketplace to go ahead and share the data, that is again a small area of work in progress. You can understand that when there are several lenders coming in and the invoice information comes to each of those lenders, now each lender has therefore got to hit the account aggregator framework and pull the data of that particular borrower. Now this multi consent is something which is currently under process, and therefore very soon we should be able to get a solution for this. It is also important that we recognize the reality of business entities not needing to share the data on a per invoice basis. So, for example, if we have financed an invoice today, we have the data of that particular business entity. And if 5 days later another invoice comes, we probably do not need to go through this entire loop again because that data is already available. And therefore, there is a need for a data room to be created, which is also something which is work in progress. So the data room will ensure that the the original information that came from either GST or the bank statement would be available in its pristine form, and therefore kept under whatever form of lock and key so that people could access that on a subsequent basis. So, these are the few points which are um, currently being worked upon, but I'm sure we'll get solutions fairly soon. uh, the level of GST data is another very important point. So right now we're really talking about uh, the GST data that's there in GST 1 and 3B, but there is a lot more information that's available in GSTN. And therefore, as we move ahead, I think we'll be able to mine that data more effectively. And as lenders, we'll all be able to provide better offers to our customers. So at the end of it, really, the customer wins. It's really about the large numbers of proprietorships, if I may say. So we normally deal with companies, but the companies, of course, are just a few thousands in number. And when we look at the informal sector in the country, we're talking about several crores. So 5 to 6 to 7 crores would be anybody's guess. Now it's these people who at the moment are probably getting access to credit, may not be bank credit, but might be credit from NBFCs and MFIs. And therefore, it's about helping and driving the credit reach more and more deep. And these are the kind of platforms which will allow that to happen as we move forward. So, thank you very much. I'm sure I've taken more than my allotted time, but pleasure speaking to all of you and look forward to some good deliberations today. Thank you.
Thank you so much, sir. Thank you very much. Definitely, it was great perspective, and a lot of points that you touched are, what everybody is waiting for clarification as well. Well, without taking too much time, I would ask the audience to be seated tight. I will be ending this session and beginning the next one immediately. Just 10 more seconds. Thank you so much. Thanks once again,
Thank
sir.
you.